I'll never forget working with a company and working with some M&A specialists. And we were talking one night and they said, do you realize that about 2/3 of the businesses that go bankrupt had their best year ever prior to bankruptcy? And it's like, really? He's like, because they were growing so fast and furious and they weren't able to keep up.
Hey, it's the Profit Answer Man, Rocky Lalvani. If you're new to the podcast, check out my interview with Mike Michalowicz. It's episode number 2. If you want to hear about each chapter in the Profit First book, go back and listen to episodes 3 through 13. Episode 1 is the why and how. On the Profit Answer Man, we learn money mastery without all the complicated accounting mumbo-jumbo using a simple system. Your accountant is busy documenting your transactions and creating a rearview mirror of what happened. My guess is you don't even look at the reports they sent you. If you're like most business owners, you struggle with this. And it's not your fault. We aren't taught money in school, and accountants aren't taught how to be profitable. The Profit First system created by Mike Michalowicz works, and he certified me to help you implement the system in your business. Remember, the new equation is sales minus profit equals expenses. Let's face it, without cash flow, you can't pay your employees, buy needed materials, or pay your mortgage and support your family. I help you to do that and more, so you can focus on the parts of the business you love and receive the rewards for your labor and investment into your business. The stronger you are as a business owner, the more jobs you create, the better we are as a country. Small business owners are the backbone of America, and for that, you deserve to be well rewarded. Just remember, more revenue does not equal more profit. That's why we focus on the bottom line. We're going to be having our last Q&A call for 2023 this December, and there will not be any scheduled at this point for 2024. Your last chance to get on next Thursday. There's a link in the show notes for how to sign up. Today, we're going to chat with Mike Iverson. He is a fractional CFO just like I am. We actually met because his client is a mutual friend of ours. And so my friend was talking about his CFO, and I'm like, oh, I'd love to meet him, share notes, and see how he does things. And Mike and I got together. We shared our systems. By the way, that's the way it works in the world that we live in. Too many people are trying to fight. Why fight when you each have your own uniqueness? Go sell on your uniqueness. In any case, we realize that we both have the same goals, helping you to have a more profitable and growing business. He does things slightly different than I do, but at the end of the day, it's the same results that we are looking for. So we're going to chat about how he sees the world, how he helps clients, and how he can help you to have better cash flow and better understanding of your numbers. Let's meet Mike. Welcome to the Profit Answer Man, Michael Iverson. It's great to have you join us today.
Thank you, Rocky. Looking forward to the conversation.
As am I. Can you share a little bit about yourself and your business?
Sure. Well, for me, I've always been on the finance side of an organization. Started way off back in the day when there's a group called the Big 8 audit firms. That's where I got my start. And then I just kind of meandered through different financial roles. I left the public accounting sphere and then went into private industry and did roles such as an internal auditor, a controller, and then a treasurer of a public company, and then out into the private industry, back into a small business as a CFO. And then I've also done startups and helped raise some funds back in the dot-com days and enjoyed the ride up and enjoyed the ride down as well, which was an experience. And then I was getting around 2002 or so, and I decided I wanted to go out on my own. My father had his own business. My grandfather had his own business as well. And so they kind of gave me the itch to say, I want to go try something on my own. So I created a consulting firm as a part of being at the time, a part-time CFO. But then today I've graduated that into really a brand that's called the Numbers Coach. Along the way, too, I've been blessed with working with several partners for the last 25 years plus. Three of us have gone through three businesses. So I've been an investor and a business partner with them on separate activities. And that's been a lot of fun because we've been able to see how to grow a business and then how to exit the business and then start all over again fresh and do it again. And now we're on sort of version number 3 and hopefully, create something of good value and keep it into the marketplace and go from there. So I get to see both being an operator, but then also being a coach to other entrepreneurs. So having the opportunity to sit in both seats, which is kind of nice. The father of 3 beautiful young ladies. They're actually triplet girls. And they were actually kind of the impetus for the business, the name of my company. While it's the Numbers Coach today, it started off as Trillium Financial, which is really the tri being 3, millennium being my 3 girls were all born in the millennium. So the third millennium. So it's a lot of fun. Truly enjoyed that. But that's what today I do coaching for small businesses. What I do is I help teams, both the owner and his leadership team, understand what their numbers mean to them. They often feel, I think you mentioned it oftentimes here at the Profit Answer Man, is business owners, it's kind of a black box for them. And they really don't know what they're seeing, or they're uncomfortable with reading their own numbers. So I'm there to help educate, equip, and empower them so that they can actually feel comfortable and go, okay, I can make decisions, strategic decisions, based on the numbers that I'm seeing and where I'm headed with Mike's help.
It's interesting you say that. So you come from a little bit different background than I do. You come from much more of I'll call it the corporate professional accounting background.
Yeah.
Do you find most people in that space look at businesses and evaluate them and look at the reports with the same viewpoint that you do?
Often they do. I think what they look at is the tendency is to look at the rear view mirror. So my training was just that. It was the rear view mirror. It really wasn't until I got into the seat where I'm like, okay, I'm now a business owner. And I not only need to know where I've been and how I got here, but I need to know where I'm going. And I think over the years, I've learned some things through my experience. And I think really when you think about it, when you get enough experience behind you, the wisdom starts to come through and the light bulbs start to go off. And you're kind of like, now I get it, because they really can't teach you that in school. Accounting theory is just that. It's theory. It's not reality. So I think through those experiences, I learned what it feels like to try to figure out how to make payroll. What it feels like going, you know what? We don't have but a month's worth of cash left. What are we going to do? How do we get this business back on track? And then also tweaking and learning how to forecast, which is a real, tricky thing. I mean, it's all judgment. It's all assumption. But the more you do it, the better you get at it. So if you think about it as a coach, and as you and I have both been in this finance space, it's no different than a strength trainer teaching you how to continue to work your muscles and strengthen your muscles. The more you do it, the more strength you get and the more abilities you have with mobility and so on. Same with a business, I think, and the same with an experience that I've been able to enjoy over the many, many years.
What are some of the biggest issues you see with your clients?
Today, I see sort of clients where there's 2 camps in a way. One is those that are being very intentional and paying attention to their numbers and to saying, okay, what are the actions that we need to take to really move this business forward based on where we're at, and truly understanding what drives their cash flow. And those seem to be thriving. And those who are focused more on the bottom line, as you hear on the Profit Answer Man, because I know I also fell in the trap as well many, many years ago when it was like, well, we want growth. Let's grow. Let's grow this business. Because if we're not growing, we're dying. Well, that's not true. At least in my experience, it is not true. You know, if you don't have, as you say, if you don't have profits, you don't have sanity. And if you don't have cash, well, then how are you going to reinvest in your business? How are you going to pay your bills on time, et cetera? So what I've noticed is those who are intentional about that and focus on that and use capital, both equity capital, but also some leverage, which would be like bank loans and so on. Use them wisely and invest in the best way possible. Those who feel that on the other side, they're not looking at their numbers regularly, or they're not paying attention enough to it, and they feel like they could throw some money at a problem. Instead of being, as you would say, being more resourceful, they're just going to throw some more resources at it. And that's really never necessarily the answer. Sometimes it is, but more often than not, it seems like that is not the answer. So I find those that are intentional and do focus on that and focus on understanding their numbers, they're in a good place today. Those who haven't, those who have sort of, I wouldn't say stick their head in the sand. What I would say is they're still uncomfortable, and therefore they sort of push it to the side, and they're not in a very good place. And I think we've seen too with the rise in interest rates, I think we're starting to finally see people go, wow, I took out some pretty cheap loans, but now they're adjusting to higher interest rates and it's not so cheap anymore. And so those folks are having some difficulties as well.
We have not had a recession in, well, I don't know, 14 years, 15 years.
That's
Recessions are always very good at cleaning out your bad competition who don't do things well, which allows you to grow market share. People don't realize it is in bad times that you grow market share and that you conquer and take a step up. And unfortunately for many business owners, they haven't had the opportunity to do so. They've been battling it out for quite a while. And I get it. As some point it's going to happen. I don't know when. And those who are on strong footing will be ready to take over and take that step. I know we're always patiently waiting for opportunities to go out there and find deals and do things, but it takes time and you can't control the uncontrollable, which is what the economy and the government do. We can only control our actions in our business and go out and do that. And I find many business owners, a lot of people don't like the finances. And the reality is, if you don't like it, you're going to do everything you can to avoid it. It's not good or bad. It's just, hey, I don't like doing that, so I'm not going to do it. And it's going to come back and bite you at some point.
It does. You're absolutely right. And that seems to be very much the case. And I think when you point out to folks, part of that whole mantra behind cash is king, at the end of the day, if you don't have it, then you can't take advantage of those downturns. If you're not set up so that way you have those reserves set in place, which I always encourage clients to do. And it depends on the business, how much you want to keep. There's a way to do that and there's a way to calculate it. But if you don't do it, then what you're going to do is get caught off guard. The economy inevitably will downturn. We always will, always have every certain number of years. So be ready, because you're absolutely right. What I have seen, even with my clients over the years, is they take advantage. Those that are strong will take advantage of those downturns and they come out even stronger and that much further ahead of their competition.
All right. We're sitting on a ton of cash waiting because that's what we do. And we're okay with that. I'm okay. It takes a lot of, I don't know what the right word is, but it takes a lot to just sit and wait patiently. Well, in the meantime, you still make money. So it's not like you're not making money. You're making money just waiting for an opportunity to really come in and take a step up and take off. So little by little, eventually it will happen. You mentioned that you can calculate that cash. What did you mean by that?
Yeah, good question. So, well, I should say most businesses, those that are on a pure cash basis, this won't necessarily apply. So if you're a cash in, cash out, but for businesses that have customers that pay on credit, and they also have vendors that allow them to pay on credit, and let's say they also have inventory, so they have to buy inventory and stock it and so on. So those three elements are roughly what we'll call working capital in a business. You got to have it. So what happens is you've got this thing called the cash conversion cycle. And it's the idea behind that is from the dollar that leaves your door, how quickly does it come back to you? And what I tell my clients is I say that's called funding the gap, because now you have a gap between when you've sent that money out to buy inventory, pay your payroll, et cetera, to when that money comes back in after you've sold the product and now you're waiting for payment. You've got to be able to still continue to operate. And so we got to fund that gap, and that gap will tell us essentially how much money do we need to keep in the bank account at, it's a directional number. It's not an absolute. But what you'll do is if you calculate that and you keep that relative sum of money in the account, then you shouldn't have an issue with paying your bills on time, given that conversion cycle.
And this is where growth screws people over.
Yes.
Because they don't have enough money to cover the cash conversion cycle as they grow.
That's correct, Rocky. Absolutely. And I haven't seen the statistic for a long time. It's been quite a while, but two things happened when I think about that is one, I'll never forget working with a company and working with some M&A specialists. And we were talking one night and they said, do you realize that about 2/3 of the businesses that go bankrupt had their best year ever prior to bankruptcy? And it's like, really? He's like, because they were growing so fast and furious and they weren't able to keep up. And here's something that I learned. We talked about the wisdom of experience. So I'm working for a public company and we're doing quite a bit of acquisition work. So we went from a business when I joined them at about 80 million. And when I left them, they were 400 million in 3 years. Lots of acquisitions, lots of organic growth. We had a negotiation going on. I was the treasurer at the time. We were negotiating a $50 million credit facility, both line of credit and term loan. And it was interesting. I had to go to the controller and the CFO, and I had to say, we need to slow down our payments to our vendors because we're going to run out of cash in a couple of months. We had our best year ever the year before. The stock was at its all-time high the year before. Now, the stock started to have some issues because I think some of the folks following it saw some of this cash flow problem coming up. And that's exactly what was happening. We lost our conversion cycle, got so long that we were having difficulties. And eventually it worked its way out. But the company, the way they worked it out, not only did they run up their debt, but then eventually they had to start selling off assets. And they ended up being a $200 million company, not a $400 million company.
And this is why you have to understand the flow of cash, how it works,
yes,
and build it up and put reserves aside. And that's why I love Profit First, because Profit First puts money aside for specific purposes. And when you have it separated, when a problem occurs, you get the early warning signal much faster, just like you got an early warning signal in that role to say, hey, wait a minute, we've already got problems coming. You can see all of this. You can see it for miles if you look and you know how to look in the right direction.
Yes.
Which is kind of what the issue is. And that kind of leads me to the why accounting reports are not helpful. And I think you kind of mentioned it before. If you're looking at accounting reports, you're looking in the wrong direction.
Yeah. It's interesting with the accounting reports, and I don't know if you find this, Rocky, but what I find most of the time with new clients is they go, P&L, income, expenses, profit. As long as that's positive, that's good. But that's where it ends. I made money. sure, you made money, but that's only half the story. And so there's always two sides to a story, and there's two sides to your financial story. There's the income statement story, and there's the balance sheet story. Now, how do these come together? The one document that brings it all together is the cash flow statement. And for me, with clients, that is the first statement you should be looking at, and the statement that means the most to you. Now, you've got to also understand what those elements are within that cash flow statement. So that's where the education and the equipping an individual to understand, well, what am I looking at? And so that's where the arcane accounting reports, you're absolutely right. They're meaningless unless you can then tie it all together with that cash flow.
Have you found that the cash flow statements that come out of QuickBooks provide much value?
I think it depends on how you structure your your chart of accounts in QuickBooks, and make sure that the elements flow into the right categories. So, for example, I have a client where there's a depreciation expense as it relates to your fixed assets. Well, that should really be falling into this operating activity area, but they had it falling into an investing activity area. Well, it's not an investing. It's actually an ongoing expense. Now, it's not a cash expense, but it plays into operating cash flow. So you got to be able to make sure in QuickBooks, your chart of accounts is organized in a way that it allocates it so that investing activities are truly investing, like buying equipment and investing in a building. Financing is actually just that. It's financing. It's either putting equity into the business, or it's putting debt or paying debt in the business. Everything else is operating. It's flowing through and from operating by two elements. One, your P&L, which is your activities of selling your product and seeing that you're making a margin on your product. But two, are you managing your working capital well? Are you collecting timely with your clients? Are you paying your vendors in a reasonable time and having good partnerships with them, but not paying too soon? And then how are you managing your inventory? Too much on hand? Too little? Those three elements will tell you at the end of the day, if I start off with a positive profit and then a business owner says, I don't have any cash to pay my tax bill, let's dig into your working capital, because that's probably where the problem is.
And I just have found the reports for cash flow that come out of QuickBooks are not very clear on giving me a good understanding of what's going on. So we pull everything out on the P&L and the balance sheet, and then we convert it all into our own Excel sheets. And then we start looking at it there because it just makes so much more sense to me. I can see everything clear as day. And I have a habit of looking at the balance sheet by month, which I don't think most people do. And I look for changes in the balance sheet by month. And then we start to figure out, where did money actually come and go? Because most of the cash disappears on the balance sheet from the profit. Like, it says I'm profitable, but where is it? Well, it all disappeared on the balance sheet, and you have to know how to read the balance sheet and look for the changes to say, this is where it disappeared to. And then the reality is, depending on how your inventory is even tracked in QuickBooks, and whether you're accrual or cash or how, you're not going to get the numbers you need. That's why we've always created separate systems. And for forward cash flow, we just use Excel. We build out cash flow forecasts. We look at the business and say, are you a 13-week or are you a 1-year cash flow business, depending on how things come in. And then you build it out. And literally, once you get that done, and it doesn't take long to update it, once it's built out, everybody goes, oh, okay, things are good. And I can sit down and have conversations about where we're going to be in 3 to 6 months, and then say, what's the sales cycle? So if my sales cycle is 60 days, I go, hey, you're good right now, but we need to really focus on sales next month and the month after, so that 5 months from now, you're not screaming at me.
Exactly. No, all valid points about that and about QuickBooks is it is an accounting tool that is simply a historical, here's what's happened. It is not something that helps you forecast. It is not something that really plays well with understanding certain driver metrics, because you're right. We use a separate software as well in order for us to truly understand how cash flows through the business.
So you actually created your own system.
I did.
Share about that?
Sure. So, it's funny. It's like over the years you work with, and I was working with Excel. And so I was creating these different models. And what I found was my tendency was, okay, I want to tweak this and make this for this client. I want to tweak that for this client. And the next thing you know, I had like umpteen different models with thousands of formulas, and things could break here and there. And I'm like, I'm customizing this and I'm customizing that. Wow, that's too much. So I stepped back, and as I was coming into this numbers coach brand, I said, really what a business owner and their leadership team needs is something that's very simple and to keep it high level, because you can always peel back the onion from a high level and go into the details of it. So let's elevate that. So I took what I did and I shrunk it down, and I took it from Excel and put it into the cloud. And what we do is we create simply a very high level financial model that also incorporates several things into it. One, it incorporates a scorecard that measures 8 key cash flow drivers plus some other metrics. And we measure ourselves against our forecast. We don't measure ourselves against last year because we don't want to do what we did last year. We want to do what we had planned on. So we want to understand, where are we relative to our plan? And so we use a red, green, yellow system that simply highlights what's on track, off track, or just caution, keep an eye on this. If it's off track and it's scoring up red, let's dig into that. Let's understand what's the cause. What are we going to do to change? What's the strategy? And those often turn into action items for the next month. Then we also have where we calculate our affordable growth rate, because every business has a speed limit, and you can calculate that. And then we also track, a return on investment, because at the end of the day, as a business owner, you're putting at risk, you're putting capital at risk. You want to have a return on your business. Well, how are you doing? What kind of return are you getting? Because at the end of the day, if you're getting the same return you would get in the market, the public markets, well, why wouldn't you just go ahead and put the money in the public markets? But no, you're not going to get the education of being a business owner. So that is one qualification that can be a benefit, because I've been there. I've been like, oh, well, this business did okay, but we didn't exit as well as we had hoped in the sense of the return. But I got some things out of it that I would never have gotten had I just been a straight up investor into the market. So there are, pros and cons to that, but that's what the software does. And what we'll do is it creates a 12-month picture, and then we track it each month, and it creates a rolling forecast. So we'll have our actuals through a certain period, then we'll add on what's left for the year for our forecast. And it does give us a balance sheet, an income statement, and a cash flow. But the scorecard is where we find out how cash is flowing through the business and why it's stuck in certain places.
So we've chatted before this podcast. I've shared my systems with you. You've shared your systems with me. And honestly, we're doing the same thing in a slightly different way. You've built yours on the cloud. I've built mine this way. But at the end of the day, we're getting the same information out. And yep, we use red, yellow, green too. And, the biggest thing is, okay, here's where we're at. What's the next step? What action can we take to improve the situation so that our business owners can sleep at night? So they know that, hey, next month's going to be okay. I feel confident. I know what's going to happen. And we always measure against it. I always make the analogy of a football game. Imagine going to a football game and there's a big grass field and there's no markers on the field. There's no play clock. As a matter of fact, there's no clock at all. So you don't know what quarter you're in, right? And there's no scoreboard. Are you going to watch that game or are you going to walk out?
Right.
Well, your businesses are the same thing. If we are not measuring your quarters, if we don't know how much progress you've made, if we don't have anything to measure against and say, are we winning or are we losing? Well, how do you know what the next play is, right? How do you know when you can take a knee and say, hey, I've won, I'm going to relax and go on a cruise? You don't.
You don't. It's like saying that, I was watching some of the college football last weekend. So those coaches, they're creating a plan, right? And they're getting their players together.
They're creating a plan. But let me ask you a question. You think they're creating the plan on the side of the field in that moment and sending out a new play that nobody's ever seen? Or do you think when there's no game going on, they came up with some plans and they came up with some action steps and they practiced some drills so that when that moment came in the game, they knew what to do?
Yes, absolutely. They were planning. They were looking at films. They said, this is how we're going to try to play this team this week. These are the plays we're going to run. Now, does that mean they don't do audibles while they're on the field? Sure. That's no different for a business. If a business doesn't have a plan, then I think it's I can't remember if it's Ben Franklin or someone who said that no plan, then you're planning to fail. And so I feel businesses need that plan. They need the financial plan. And it doesn't have to be anything of great depth or detail, but you've got to be able to have what I like is I've used one-page business plans with clients and a financial model. With those two things together, the team should be able to then execute and move their business forward from there. And if you think about it, it's like the way I look at it is the reason I do a 12-month is if you go further out than that, that's a lot of thinking that's hard for people to grasp. But if you're going out 12 months and then you're really looking shorter, you're also looking at the next quarter. It's kind of like that playbook where the guy's on the 20-yard line and the coach is like, we want to just get to the 30. Okay, we got to 30. Okay, first down. Now we want to go to the 40. Okay, great. Got a first down again. And they're moving it down the field until they finally get to the goal. Well, that's the same as a business. Create the plan, execute, move that yardstick, and get down the field.
And we kind of talked earlier about recessions. We are already putting together recession plans for businesses. We've already got ideas of what are we going to do? How are we going to pivot? What are the different ways to change your marketing? Where do you pick up growth? All of that stuff. And again, it is not a novel, right? It's just, hey, while you're breathing and you're thinking, let's come up with a plan so that should we find ourselves in the water without a life preserver and drowning, we know how to swim. And that's all it comes down to.
That is correct. I agree. And, it's, I think about today, where we're at today, and at some point we're going to have a recession. It's coming up. We just don't know when. And I can see clients who are well positioned for it, and I can see clients that are not. And the ones that aren't, we're trying to encourage them. You really need to get yourself structured in a way that is going to allow you to weather through this storm, because storms do happen, and it will happen at a certain time. And most of the time it happens when you're kind of caught off guard. And what I've also found too, and you might have found this with clients, Rocky, as well, is some clients, the economy overall might be doing well, but they're actually in a recession in this other industry. It's not doing well. And I've seen that with some clients as well. And so they get caught off guard going, well, wait a minute. They say we're not in a recession. But oh my gosh, I'm sort of feeling it.
It's funny you say that, because what I'm seeing a lot with the marketing agencies right now is they are in a recession because I think ChatGPT has started messing with the whole place of marketing. And so it's changing their world, and they're trying to figure out how to pivot through that. So it's always interesting. But yes, office space. recession,
That's
and they've got a double recession. I mean, COVID, nobody's in the office, and now their interest rate just doubled and their payment just doubled and they have no tenants. So,
yes.
what is your plan and how are we getting out of this? And that's what it comes down to.
It's interesting. The book by Mr. Collins, Good to Great, and he has a consulting firm. Now, I don't recall, I recall reading something, and I don't know if this is a fact, but I do remember, I think he was asked about, well, how do you manage your consulting business? And one of the things that came out of it was he holds, or at least this was what I thought I read, about a year's worth of expenses in cash.
Mm-hmm.
Now, why would a company do that? Well, if you're a company that is very, very transactional, you do not have recurring revenue. So therefore, every year you've got to recreate your revenue stream. What happens when, i.e., COVID shuts you down, or some situation comes along and now you don't have anything coming in for project work, but you still have your key employees that you want to keep on staff? Because if you don't have the cash to do that, you're going to be having to let them go. Well, can you get them back? Maybe, maybe not. And these days, we know how tight the labor market is.
So true. If people would like to learn more about you and your business, what's the best way for them to do that?
Sure. They can reach me at mike@trilliumfinancial.com. They can learn more about me at that same address at trilliumfinancial.com. And it's spelled just like the flower, TRILLIUM financial.com. And then I also have a LinkedIn profile, and they can learn more about what we do and the numbers coaching process. And would love to connect and just even hear their story, because that's the best part about what I do. And I think I speak with you, Rocky, that you do, is that we get a chance to work with some incredible entrepreneurs and get to see the experiences that they have. So I'm always interested in their story.
Cool. And we will put that in the show notes to make it easy for people to connect. Thank you so much for joining today.
Rocky, thank you. It's a pleasure.
I hope you enjoyed that. Like I said at the beginning, we're here to help you have a growing and more profitable business. Part of that is preparing for storms, whether it be COVID, the economy. We don't know what's happening, but when we're prepared for them, it allows us to pounce when everyone else is struggling. See, market share is gained during downturns. Downturns are where you get to skyrocket and make jumps that you couldn't otherwise make because there's too much competition. During the downturn, everyone's hiding. But if you're properly prepared, you can take off. And that's really what it comes down to. But you've got to be prepared up front. You also have to understand your numbers. You have to see where the leverage points are that can help you to create that excess cash flow so you're ready for that, and how to put it aside. At the end of the day, we want to understand how money flows through our business so we can make sure that it's flowing the way we want. If one of us can help you, go ahead and ask. And as we always say, you don't need more resources. You need to be more resourceful with what you have.
If you'd like for us to be a part of your profitability journey, we have different programs available ranging from do-it-yourself to one-on-one coaching. Our course, The Profit Blueprint, teaches you everything you need to know to transform your profitability. There are 3 different tiers ranging from DIY to done with you so that businesses of all sizes can get the support that's best. Join the waitlist in the show notes to get more information and be a part of the next cohort. If you want a done for you service, you can hire us as your chief profitability officers. We only work with a handful of clients, so they all get our full attention. We work with business owners who have or are growing to $500,000 to $10 million in revenue. You can use the scheduling link in the show notes to get on our calendar for a good fit conversation to see if we're the right people to support you and how we can help you.
This episode of the Profit Answer Man podcast is brought to you by SMBpodcastnetwork.com. The network is a collection of podcasts and shows from around the internet which focus on bringing you interviews with amazing guests who share actionable advice, ideas, and information for small and medium-sized business owners and entrepreneurs. Visit www.smbpodcastnetwork.com to find more great shows and easily subscribe to be notified of new episodes. It's a great way to discover quality content. If you've discovered us via the network, then I hope you enjoy today's show and will consider subscribing directly so you never miss our episodes. Remember to check out my other podcast, Richer Soul, where we talk about how to live the ultimate life and be the best business owner you can be. As we close out, let's repeat the mantra. Revenue is vanity, profit is sanity, and cash is king. Have an abundant and profitable week.